Hey, good morning, everybody. Happy Monday. How are you? We are back at it after the birthday on Friday, the birthday weekend, celebrated with the family. Really do appreciate everybody that took the time to send a reply or a message. I'm still trying to get back to a few of you, and I do appreciate it. I was truly humbled by that gesture. Thank you very much. Let's take a look at GameStop and that option flow. Take a look at the market as well this morning. Quickly try to get you a video. We did see the high this morning on GameStop 27.24 pre-market. About 462,000 shares traded. But some of the news that broke over the weekend, here was the headline: Trump exempts phones, computers, chips from reciprocal tariffs. And I had said pump coming on Monday. The exclusions, published late Friday by U.S. Customs and Border Protection, narrow the scope of the levies, excluding the products from Trump's 125% China tariff and his baseline 10% global tariff. So here was actually the Bloomberg article. Went ahead and shared that. And we went ahead and broke down the article as well, and then linked where the actual, this is where Bloomberg had cited where that came from. So when they said late Friday night, it's because the U.S. Customs and Border Protection sent that bulletin Friday night at 10:36 p.m. Eastern. I made sure to share that. Not every source on X will share that nitty gritty and then link it for you. That I do that so that everybody can read this stuff themselves and then form their own opinion. Just throwing screenshots without the article link or the link to the border patrols website, or what Bloomberg was citing. You need to add that context. So, and where they came was, it said in accordance with the April 11th presidential memorandum clarification of exemptions under Executive Order 14257. So it's just some exemptions that they had done. In response to that, we will look at Apple this morning, because I had just shared Friday. We noted the strong call volume on Apple, nearly 19-20 million in option premium, and they were targeting the 200 and 210 calls for this week, which, if you didn't know, it's a short market week with Friday being Good Friday. So these contracts were very short dated with the Thursday expiry. And those were coming in. Let's see, the $200 Apple call, for this Thursday, those closed at 5:35. And let's see here. Let's check it. Yeah, the current share price is $210. So those are about $1,140. Those are up $600 a contract over the weekend. And then we noted the 210s. And this was all coming in on flow alerts on Friday on Unusual Whales. The 210 calls were at the close $176. And let's see, those are in the money, and the IV will spike today. If we use like Robinhood simulated tool, roughly about $450 a contract. So not a bad move on Apple. And who would have thought, right? It does happen that way. But let's look at GameStop on Friday. I know everybody was excited. 5 million plus net call premium. It was actually 5.3 mil. With total premium 55 million. I know a lot of people were excited about the June 20th $20 calls. I don't want to say that a bunch of people were putting misinformation, but there was a ton of misinformation about the $20 calls for June. And we're going to break that down as well. There were some call debit spreads, which could also be called a bull spread. That actually has a bullish sentiment. And there was also some shorting of the $20 calls in conjunction with the $30 calls. So like a short multi-leg call. And we're going to take a look at that this morning to make sure we get you the most accurate information. So like I said, the flow was pretty decent on Friday. And you did see a close of, what was the close Friday? 26.40, 26.39, 26.40 adjusted close there. Solid. I mean, if you look in your top left corner, we talked Friday about all of your moving averages. Those are up there in the top left corner. So yeah, RSI moved back up. Nice higher high on Friday and a higher close. In fact, a close above 26. Not too bad of a move in that regard. And we noted here, since earning and the convertible note arbitrage, volume has certainly picked up with GameStop. And if we also note the last couple of weeks with the option flow, it's been starting to pick up in that regard. And we've talked about the $25 gamma level all last week. That's kind of achieved, because we talked about, as GameStop moved closer to 25, the 25s, the 26, 27, $28 calls become in the money. This morning during pre-market at 27, there's those 27s in the money. So with everything closing Friday at 26, all the 25s, all the 26 in the money, it put that pressure, that gamma pressure. I did a video last week exactly explaining gamma and how that affects the stock price. how it affects market makers. So it's about a 5 minute video. Go back to my X and check that out. So as I said, we other than the day of earnings there, net call premium, it kind of fallen flat. It has really ramped up in the last week. So if we zoom this into the 7 day, I'll give you a better picture here. The put premium, yeah, sure, a little bit because there's some hedging going on, but the call premium has been on the rise as the stock's been back on the move. So if we take a look on Friday, here was your highest volume contracts trade, a lot of short dated 26, 27s for Friday. Can't really look at that. We had 30s for this week show up. What else? More 30s for the May 16th and some May 16th expiry. And let's see here, 28th April. So you go ahead and pause, take a screenshot, do what you need to do there. See if we can zoom it in a little bit for you in real time. And these were your highest volume contracts as of Friday, and then the highest OI there as of Friday. So we take a look here. Let's zoom back out. And we'll take a look at those 30s here to see what's updated. And we'll look at all the open interest and all those changes so we can get you all the accurate detail you need here to get you going. So you see that volume Friday, nearly 19,000. None of that appeared in new open interest, even though 600,000 roughly transacted there. Both sides kind of split there between buyers and sellers. So I'm sure people bought, then sold. I'm sure people saw it or, sold, then bought back. There's a lot of day trading that goes on. Contracts trade hands as well. New set of buyers, new set of sellers, etc. So, with GameStop moving up, I'm not sure what the price. Let's see, we're at $26.90 right now this morning as of filming the video. So right near knocking at the 27. So if that holds, some of those will move up a little bit. Let's take a look at what else for the 30s for May 16th. Now I do like to see that's a little bit positive to see. We had about 2.3 million in total option premium there Friday for the $30 calls because we've been highlighting that May expiry and the Delta and Gamma that's been building up for the May and the June expiry. So of that volume, Friday 13,000, roughly about 6,000, nearly half, a little under half, appeared in new open interest. Not really directional per se, and then it was split between buyers and sellers. So yes, there are some bullish traders in there, and there's those probably selling some calls as well. But good to see, that open interest carry over on the 30s as it, puts a little bit more pressure further out on the stock. So as the stock moves up, those $30 calls, get closer to the money, and that gets back to that gamma pressure. And we'll revisit the spot gamma during this video here in just a moment, and we'll talk about that again. Just a little quick refresher, nothing too crazy. And we noted last week also the $32 and $33 calls. We saw those come in on Thursday, and then they appeared in new open interest into Friday. So Thursday, about 1 million in total premium. Saw a lot of that show up on Friday in new open interest. Now, Friday, we did have about 12,500 volume and nearly about 1.6 mil total premium. But you see here, negative 1486. Open interest actually decreased in that regard. So trader could have took some a little bit off the table because it's the ask volume here Friday, about 6,300 bid, 6,400, 1,400 decrease. More than likely, I would assume a trader just took some money off the table and some of those contracts traded hands in that regard. So, but those had moved. Originally back here, see, they move up from the Thursday 115, 125. So yeah, about another $15 on. They did move up a little bit. And then the 33s were also something we talked about last week because it was the same scenario. We saw them come in on Thursday. They carried over into new open interest. And then Friday, about 1.2 mil in premium. Again, same kind of thing. 9,600 volume, but a decrease actually of almost 2,000 in open interest. So did some of these change hands? Probably. Did somebody close their position? Possibly. Could it have been, a call seller? And then the calls moved up, so they had to exit them. That's very possible as well. The flow sometimes is directional, and you'll get lucky, and it really is like boom, boom, boom. This is what's happening. Other times it's just noise. You don't know what other traders are doing with their common stock. They could be using these call or put positions for hedging, market makers, institutions, etc. Because you always have to think who's providing you the liquidity on the calls, the market maker, and or somebody selling, like covered calls that already owns the stock in that regard. Let's see, the $28 calls, though, for this week expiry, with GameStop kind of, let's see, $26.77, slightly out of the money, about 4%. Did see about $500,000. I try to just look at things $500,000 or higher in total option premium. Now, there was some volume yesterday, about 9,200 on Friday. About 3,600 appeared in new open interest. Kind of split again, a little bit more sell side than buy side, but that could just also be good fills. For example, I could buy a contract but get a good fill, and if it was the price was closer to the bid price than unusual whales, that would show like a bid when in reality I bought. So it's never really exact in that regard because you have to look at the spot price, and that can change often when the contract itself is filling. So there's always, you got to always take it with a grain of salt. Well, that's why we dial into it. We look at the flow. We take a deep dive with it. We use the platform for what it's worth. So we did see about a third of that volume carry over in new open interest. So some traders may feel that GameStop will close below $28 this week. Um, so they decide to sell a covered call in hopes to have it expire out of the money and they keep the premium. Some may think the stock's going to move up, so they bought to see if it does. So always a couple ways to look at that in that regard. So if we look like historically, the IV on Friday was about 89%. So it has been moving up, which is fun. Makes it a little more volatile, I know, especially your short dated contracts, but it can make that premium a little bit more juicy. So aside from the Friday expiry, April 4th, last Friday was the highest option premium, again at 55 million. So if we take a look at, I'm going to pull up one thing here. We're going to pull up GME again, and we're going to talk about those June 20th calls. Hang on just a second here. I'll pull that up for 1 second because I know it was like the highest option premium on GameStop Friday, and there was a lot of confusion. I don't think it was confusion per se, as it was possibly just some misinformation. So if we look at the top premiums here, this is organized by top premium. So go ahead and take a look at that. That way you can see what's actually here for Friday. Let's make sure we got the most accurate here. All right, and then we're going to also take a look at those $20 calls, so for June. But here was your top option premiums on the 30s for May 16th, 32, May 16th, 33. So what we've already been highlighted. 31s for May 16th also showed up there, and 30s for July. I think some of those were sold. Let's take a look at that. Could have been sold here and bought back. It's had about $1 million in premium, about 2,500 volume Friday, 1,600 new OI, but this kind of concern, like someone might have sold and then had to buy some back, and then contracts traded hands. But that was $30 calls for July. So somebody might be trying to, work on building the May and June ramp from $25 to $30. Somebody might be trying to work on building, that higher ramp as well. $20 calls for January, deep in the money. Thing with selling those, you could get assigned. Even buying them, you could exercise as well, just depending on your premium and your cost basis, and your investment objective. So I usually just look for, higher than 500,000. So let's take a look at those June 20th calls. We'll pull up here we're going to take a look at those Junes here for 1 second. We can get that picture on there. So we're going to look at the June 20th here. And by the way, Unusual Whales is having a sale through next Tuesday. So if you use code WOLF or my link, you can get yourself a discount, about 15% off, I believe. And I think 25% if you're already Unusual Whales and you've got a monthly, but you want to upgrade to the annual, which offers you a savings in itself. So use my link. It's an Easter sale. Always happy to help when and if I can. So let's take a look at those $30 calls on GameStop. So this is what went down there. Let's see. Oh, pardon me. They were the 20s. I apologize. They were the $20 calls for June in the money. Here we go. This is what I wanted to look at. So Friday, 7,000 volume. But see that option premium on Friday? Everybody's like, oh, look at this. They're loading the calls. Da, 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 da. Sure. 7,000 volume, right? You see the option premium, 5.3. That looks like all of the net call premium. Well, I just showed you, the highest option premium. It was sorted out there. Well, if you look here, OI actually decreased this morning with today's update, 945. So what happened here? Let's talk about a couple of scenarios with the 20s. Now, what nobody was, or few people report on, a lot of these were multi-leg trades. What that means is this was not just people loading $20 calls bullishly. These were not just directional in that regard. There were the call debit spreads, aka the bull spread, which is bullish in nature. There was also shorting of of the calls by selling 20s and 30s at the same time in hopes the price go down. Now, you didn't see the OI change. So, did some people sell $20 calls and get assigned over the weekend? That's very well possible. A market maker could do that because, let's see, they were filled at 747. So, if you had 747 plus the $20 strike price is 27.47. The stock was 27.24 this morning. So, depending on your situation, you could sell deep in the money calls as a way to exit a position. So I've done that in the past too, where I'll sell extremely deep in the money call because the option premium I'm collecting up front is going to cover the stock being called away at maybe less than my cost basis because the option premium is going to make up the difference. And the reason I've sold deep in the money before is because I was looking to get out of the position at a price higher than what it was currently trading at. And I did that via the option chain. And I'd always be happy to discuss that particular strategy. So, and I posted about these on Friday about those calls not being what people thought, and I didn't mean that in a negative way. It was just there was a lot of misinformation. So I wanted to break it down in a way where others might be able to understand it. Like, hey, okay, I understand exactly what he's saying. So let me see if I can pull that back up here. Let me go back to the posts. Yeah, here we go. On Friday, I'd posted the June 20 calls for $20 to the tune of 3.2 in option premium. Not what you think you see. These were mostly multi-leg trades as they were selling the 26, 27, 28, and $30 calls as basically a call, debit spread, a bull spread. So they're looking for just a little movement in the stock. That's how that strategy works. And the context here is important. So we'd share this. Everybody's like, look, 3 million, they're loading June 20th calls. They omitted the 96 multi. What that meant is unusual whales detected most of these trades were all multi-leg. They were connected. They were in addition to other trades. For example, yes, somebody was buying the $20 calls for June, but they also sold 27s. So they bought 500s and sold 27s. That's a call debit spread. So they receive money for selling 27 and then put that money towards buying these in hopes the stock moves a little, but not too much, and they make some money on the premium and or the volatility. Same scenario, the 20s, 28s. Trader buying the $20 calls, selling the 28s. Again, a call debit spread. Now, here's a different scenario. Here's shorting the calls, selling both the 20 and 30, hoping to profit by selling them. So that's called a short multi-leg call. So it wasn't just in that regard, and that's why I thought it was important to share. There's a lot of people that share flow, and I don't mean this in a mean way, but they don't know exactly what they're doing yet. They just need to spend more time with it, and then it creates misinformation. So if we look at some of these candle fills, for example, we'll look at it, and I'll show you here in real time actually how this works. So you see here when these come in, here they are. You're like, oh, they sold a bunch. See these arrows? It's all part of a strategy, multi-leg. We can click on that. Unusual whales will take it a step further. They'll break it down for you. Yeah, they sold the 20s, sold 28s and bought the 20s, a call debit spread. Yep, if you have unusual whales, it'll lay this out for you. If you follow my account, I'll try to lay it out for you if you follow and pay attention. So, yeah, that's what that was. So it wasn't all just, sure, there are people that may be buying those to exercise or they're deep in the money, but, it could be people selling them as well, to be assigned. So it all depends. But it's very important to look at that, especially when the OI decreases. And as the market is getting ready to open and as we wrap up, see GameStop at 26.75. And right before the opening bell, there are your moving averages on the top left corner. Take note of that. We'll be watching the option flow, taking a look at the overall market today. See SPY up about 2 points this morning. Apple's crushing, nearly up 7. We'll see what happens right here at the opening bell. But I do appreciate everybody that watched the video. You're awesome. If you did watch it all the way through, why don't you reply down below, Unusual Whales Easter Sale. And I'll know you watched today's video below. I'll leave it linked, so make sure you get a discount. And if you need help with Unusual Whales, they have plenty of resources on all their social channels, including YouTube. And you can always send me a DM, and I'd be happy to help. I get a lot of messages, a lot of communication regarding how to use Unusual Whales, how to do custom flow alerts. The bottom line is I'm just here to help others use the platform, explore it in ways that might help them, gain an edge, and ultimately just see them make a little bit more money and lose a little bit less. Like to see more winning trades than losing trades. Yeah, just to help build some consistency, just to help learn about the option flow, learn about strategies, learn about what happens when big money pours into a option chain. Because like we talked about with the as I wrap up here with the gamma, we'll look at that because it had ramped up. And I said, if this thing gets moving up 25, 26, 27, more calls go in the money. So I mean, here's your 25 gamma level, and we're just knocking at the door of 27, 2670 right now with the market open. So here's more gamma. So if stock moves up, boom, more calls go in the money. And if you need a refresher there, pause on what spot gamma is, or go back to that video that I posted last week explaining spot gamma, the impact on the price of the stock, as well as the impact on market makers. Pause here, screenshot. I think it would do you well because gamma has increased now to about 20 million. So exposure about 3 million shares long, about 20 million. So what that means, every 1% price and change requires about $20 million in market maker hedging as the positions shift, because more of these calls go in the money as the stock price goes up. And in that relationship, when you look at the actual gamma here, we're at the highest net gamma was at the 25. I mean, now it's billed at 27, and now it's at 30. So the highest is at 30. And then if we look by expiry, they're targeting this week really heavy, a little bit in April, and starting now to build in May and June, just like we've been talking about for the May and June option expiry. Same type of setup we saw last year. So stay alert, follow this account, turn on your notifications. We'll post the banger flow when we see it. I'll try to keep you on. I try to get you ahead of the move to make you some money. It's how you manage your risk, your emotions, and the trade. After that, I'm just here to help and always love to help. So I do thank you, and it looks like you might be getting 27-ish close on GameStop. Like I said, we talked about this. I talked about it last year when GameStop was $22, $23 and huge gamma ramp above 25. I'm like, if this thing gets to 25 or higher, more of those calls go in the money. It's going to induce FOMO, more buying, more market maker hedging, more people, piling into YOLO calls. Boom. And you saw what happened last year. Yes, last year did have Roaring Kitty, but the same kind of concept happened with Gamma. The same thing that's lifted GameStop above 25, with sentiment, recent insider buying, and now a little bit of pressure on the option chain. It's kind of exciting to see, and I'll always be happy to report it. Welcome all the new subscribers to the page. I do appreciate that. Thank you, everybody, for the support. Have a great day. Stay safe out there, and I'll see you around the internet very, very soon.